Welcome back to The Explainer. Today, we're diving into a super specific and honestly highly misunderstood concept tucked away right inside UAE VAT laws. Look, if you run a business, you already know that managing your taxes is really just about managing risk, right? Well, today we're shining a massive spotlight on a hidden risk that catches a lot of really smart people completely off guard. So, could your business actually owe a 5% VAT on items you literally just gave away for free? I know, it sounds totally counterintuitive. Usually, if no money changes hands, there's no tax, right? Well, actually, scratch that. It's not quite that simple. Okay, let's dive into this, because the possibility of getting hit with an unexpected tax bill is very real under UAE law. Don't worry, we've got a super clear roadmap to get us through these complex rules. We'll quickly cover the standard UAE VAT rules, break down exactly what deemed supply means, walk through 4 specific deemed supply scenarios, and then wrap up with the exceptions and your next steps. All right, let's jump right into Section 1, Standard UAE VAT Rules. To fully grasp the exception, we really need to nail down the baseline rule first. Normally, for a transaction to be considered a supply, it involves goods or services provided by a registered business in exchange for consideration. You sell a product, money changes hands, and boom, the 5% VAT is calculated. Easy enough, right? But what actually happens when that monetary consideration, the money changing hands, is completely missing? Well, that brings us right to Section 2. What is deemed supply? Now, what's really interesting about this concept is that we hit a fundamental difference in how the law views a transaction. Deemed supply acts as the sort of invisible transaction. So, in a few very specific, exceptional scenarios, an activity takes place that completely bypasses the standard conditions. You provide goods, but absolutely no money changes hands. Zero consideration. Yet, the law looks at that and deems it a supply anyway, which means, yep, you still owe that 5% VAT. So when exactly does the government step in and declare that one of these invisible transactions has happened? Let's get into Section 3, the 4 deemed supply scenarios. The UAE VAT law outlines 4 very specific instances where this invisible tax rule kicks in. We've got assets supplied for no consideration, GCC stock transfers, non-business use of goods, and tax deregistration. But hey, to really wrap our heads around these concepts, we aren't just going to sit here and read dry definitions. Instead, we're going to walk through a really relatable continuous case study. All right, meet our hypothetical business, Ollie Spares Ltd. Let's say Ollie Spares goes out and buys 15 computers for their office so they can maintain all their business records. The total cost, 30,000 dirhams. Now, because this is a standard business purchase, they pay a 5% VAT on that, which comes out to 1,500 dirhams. And, doing everything by the book, they rightly claim an input tax credit for that exact amount. Basically, the government refunds them that tax because, well, these are strictly business assets. Now lock that 1,500 dirham input credit in your memory because it is literally the key to everything that happens next. Okay, scenario number 1. Assets supplied for no consideration. Imagine a few years pass by. Ali Spares Limited decides to upgrade their tech and they want to be generous, right? So they give these older computers away to their employees, completely for free. So what happens? Well, even though they gave the computers away without any money exchanging hands, Ali Spares is suddenly on the hook for a 5% VAT. Crazy, right? But why? It all comes back to that input tax credit they claimed when they originally bought them as business assets. The second those assets leave the business environment, even for free, it's deemed a supply, and boom, the tax becomes due. So that covers local office giveaways. But what if Ollie Spares isn't just handing things out? What happens if these business assets actually cross international borders? Welcome to Scenario 2. If you transfer business assets from the UAE to another GCC implementing state, let's say Saudi Arabia, for example, or vice versa, it instantly triggers this deemed supply rule. Yep, simply moving goods to another GCC member country triggers the exact same tax liability, just as if you had officially sold them. Jumping back to our case study, let's say instead of giving the computers away, Ollie Spares opens up a brand new branch in Saudi Arabia. They keep 10 computers in their UAE office, but they permanently transfer the other 5 over to Saudi Arabia. And this brilliantly illustrates the cross-border trap, because that permanent transfer of those 5 computers, that is considered a deemed supply. So Ollie Spares Ltd is now legally liable to pay VAT on that specific transfer, even though the equipment is literally just moving between their very own company offices. Now, don't panic. There is actually a bit of relief here, and it's absolutely crucial to note. There are some specific exceptions to these GCC transfers. For instance, if the transfer is treated as a temporary transfer under customs legislation, say, I don't know, you're sending equipment over for a 2-week trade show and then bringing it right back, you're completely spared from this specific tax hit. It's also exempt if the transfer is already part of another taxable supply of those exact same goods. Okay, let's reset our computer stash and look at scenario number 3, non-business use of goods. Suppose Ollie Spares just keeps all 15 computers right here in the UAE. 14 of them are strictly used for business, maintaining company records, handling accounts, all that good stuff. But the owner decides to take just one computer home purely for personal use. Here is the absolutely crucial point. You are only legally allowed to recover input VAT when goods are used for making taxable supplies for the business. If you divert a business asset to personal use, you instantly invalidate that original claim. Since the input VAT was already recovered initially, that single personal computer has now become a deemed supply. And you guessed it, Ollie Spares owes the 5% VAT on it. And let's see how this all builds into our fourth and final scenario, tax deregistration. Basically, if your business ever deregisters from VAT, the government wants to square the books. Any business goods you still own on the exact date of your deregistration are immediately considered a deemed supply. That means simply closing out your tax registration status instantly triggers a VAT liability on all those existing assets, assuming, of course, that you previously recovered the tax on them. Phew. Okay, that is a whole lot of potential tax traps to navigate. Let's transition over to Section 4, Exceptions and Next Steps, so we can kind of zoom out and look at the bigger picture. Look, if you're sitting there right now worrying about every single internal movement happening in your company, just take a deep breath. The tax guidelines actually state very clearly that any instance falling outside the specific scope of standard supply and these deemed supply rules is considered completely out of the scope of UAE VAT. So beyond these very clearly defined exceptions we just talked about, your other untraditional internal transactions remain safely untaxed. The law is highly specific, which is actually a good thing. It means you can plan for it as long as you're informed. Which brings us to our final big question for you to chew on. Are there unregistered, invisible transactions sitting in your business right now that might owe a 5% VAT? Seriously, think about any business assets you might have given away or repurposed for personal use, or maybe even transferred across GCC borders where you had previously claimed an input tax credit. I'm challenging you today to go review your asset registers and really evaluate your own compliance based on what we've covered. Remember, knowledge is power, but application is compliance. Thanks so much for joining me on this explainer. Stay focused, stay curious, and we'll catch you next time as we decode even more complex topics.